Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to this Friday edition of Benzinga's Pre-Market Prep for January 27th. I'm Spencer Israel. As always, joined by Joel Elconin and Dennis Dick. Today's show is brought to you by Chaikin Analytics with their groundbreaking stock research tools, including the proven Chaikin Power Gauge rating and stock discovery engine. Chaikin Analytics simplifies complex investment decisions, and it's all presented in an easy-to-understand platform. It's up on the screen right now. To learn more, visit chaikinanalytics.com/premarket. That's Chaikin, CHAIKIN, analytics.com/pre-market. You can see up on the screen a chart of Microsoft because that is one of the many stocks we're going to have to cover on today's show. We're going to try to find time to cover as many as we can because we also have three guests today. 8:15 we have Christian Magon. He's the founder and CEO of Magon Capital, an ETF guy. And at 8:35 we have Kenny Glick. He's the owner and creator of HitTheBid.com. And then at 9 we got Gordon Johnson, one of our favorite guests. He is the managing director at Axiom Capital. So let's just skip right to Joel and Dennis and tell us how we're doing, and we can go cover some stocks.
Quiet range in the S&Ps, almost 6 points. Low at 22.91. Pre-market high is 96.75. So let's keep an eye on that. The all-time high from yesterday, that's 22.99.50. Crude, still a little bit of a trading range, though we did take out the highs in the 53.70 area. Currently trading down 30 cents at 53.48. And the gold market down again at down 790. Distance ourselves from 1200. Silver back under 17 here at 16.72. Dennis, how you doing this morning?
Doing okay.
What happened?
Had a little injury. I play hockey Thursday nights. Had a little injury. It wasn't even seem that bad. I just got slashed pretty good, and I don't even actually remember like the actual spot where it happened because I get slashed so many times out there. You know, you're playing hockey. It's a little bit of a chipper league, just a little bit chippy out there. But anyways, I didn't think much of it. I was like, oh, I leg hurt a little bit, but I just played through it. And then, at the end, I take off my stuff, and I look, at the end of the game, and I take off, and I'm like, oh, my legs all, kind of, messed up pretty good. Pretty good little hack, like a little cut. I'd say, the size of a dime, out of, where I got nicked. But it's kind of deep, too. So it's, bleed. It was like all in my pants. Everything was, all bloody. My sock, everything. When I took it off. So then, I'm trying to figure out. Okay, well, I'll just wrap it up. And it'll be okay. And I don't, go home. And an hour or two goes by. I check in. It's still bleeding. And I wake up this morning. Here I am 12 hours later, and I'm still bleeding here a little bit out of it. So I don't know. I think I probably ought to go get stitches. This sucks.
Did you go after the guy?
I took his number. I'll remember next time.
Yeah, you got to put an X on him. And
yeah.
But did you win?
I know we lost too, so that's even worse.
All right,
so it was a little bit of a rough night.
Crazy earnings reports last night. Google,
Jimmy
Microsoft.
Says, thank God for socialized medicine.
All right, what do you want to start with on the earnings? All
right, there's so many earnings reports. Let's start, with Microsoft here because a lot of people, follow and trade Microsoft. I'm one of them. I love trading Microsoft. This thing was absolutely wild after hours last night. It rallied, it fell. It rallied, it fell. It rallied, it fell. Check out the pre-after hours chart. Spencer, give us the numbers, and Joel break down that after hours action because it was choppy.
Well, they beat on the EPS, the Q2 adjusted EPS, 83 cents versus 79 cents. Q2 revenue, $24.1 billion versus 25.28, so a slight miss there. And that's pretty much all you need to know.
So the stock goes up to 65, and then it falls all the way down to like 62 and a half. And you know me, I'm sitting there looking at that 62 on the dailies. I'm like, yeah, come to Papa. Give me this at 62. Trying to buy it down there, but it didn't. It only got down, I think, 62.43. So I missed it by about 40 cents because I think I was sitting at 62.05 and 62.10. Anyway, stock rallies right back up. Then it goes up 65 again, and sells off to 64. It goes up to 65, sells off to 64. It goes up to 65, sells off to 64. I'm like, Holy cow, yo-yo trade there. I guess, I don't know why I kept, chopping around so much, 65 to 64, but you can see it on the bars there. There was some money to be made if you were just fading that chop all over the place in Microsoft. It has now sustained a rally here in the pre-market, though. Chop no more. It's been rallying steadily here for the last few hours.
New all-time high for Microsoft here in the pre-market session, at least at 65.68. We've backed off a little bit from that, but not very far, so just keep an eye on that level. We will look at the lows at 62, Dennis. I can see why you were standing out there at 62, didn't quite get there. This was an hour that it traded between 64 and 65, so
Yeah.
there are the whole numbers working for you during the after-hours session.
Let's jump over here to Google's report and GOOG or GOOGL. Which one do you want? You like the Goog. You like the traditional Goog, don't you?
Correct.
All right, let's go to the traditional Goog, GOOG, and this thing chopped around too. It was the night of choppy earnings where you saw the pop and the drop. This had the drop, then the pop, then the drop. What did Google have to say, Spencer?
Q4 adjusted EPS of I'm looking at Google, by the way, $9.30. sorry, $9.36 versus $9.64 estimate.
So it looks like a miss. And then they smacked it, and they hit it hard, Joel. Where'd it get down to?
This is the L. They got down the big range. This is on the 15-minute. It was probably took less than that to do it. 866.01 to 822.20, and now
40 points.
Yeah, now just hanging in here at 848. Let's see, because I need to go because I always have Goog up. I'll go Goog L here.
They follow each other, so
yeah.
you can just pick your poison.
The close, 856.98. That was a close from yesterday, so definitely has to go green. If you go into rally mode, the all-time high from regular trading is 861, so that's the relevant level on the upside.
But it's on the comeback trail here too.
Yeah.
So, you can't keep a good stock down. You can't keep a good stock market down. Every time we dip on anything, it just seems to find buyers. And in the pre-market, they've come in with their buying shoes on. And we are starting to see a steady rally here in Google too. So, and then Intel was the same story last night too. They smacked Intel hard on its earnings report. Now it's up. Spencer, Intel numbers, and then Joel, how low to get last night?
Q4 EPS 73 cents versus 75 cents, so a slight miss. Sales 16.4 versus 15.8, so a good job there. They also see the fiscal year 17 GAAP sales unchanged year over year. They issued some Q1 guidance as well. Adjusted sales at $14.8 billion, plus or minus half a bill. What's $500 million between friends? And the estimate there was 14.5, so slightly higher than the estimate on the Q1 adjusted sales guidance.
They murdered this thing right on the initial report. How low do we get?
36.50, and if you were looking at your daily charts, you had maybe 6-7 lows right at that area. It got scooped up there. Now trading in the green a little bit. The pre-market high, that maybe was a little bit of a whoops trade at 38.59. Keeping an eye on the two highs, right? Looks like the $38 level's been targeted, at least over the last two sessions, $37.92 and $38. So we'll keep an eye on that. Above that, pre-market high, $38.59. Important for it to stay green, though, so keeping an eye on the close in Intel. Yesterday's close, $37.56.
It was the day to buy the dips, or the night to buy the dips on these earnings reports there, because like we said, Microsoft went down all the way to the 62 handle. Intel got beat up. Check out Wynn Resorts, WYNN, because they hit this thing hard on its earnings too. That thing went all the way down to 90. And now it's 102, so it turns around on a dime. The report, Spencer, give us the numbers on Wynn, because I think they missed, but this market doesn't matter. They just want to come and scooping everything up. How did WYNN do last night?
Well, no, so they didn't miss on the earnings. Q2 EPS $1.12 versus 86 cents.
Okay, so they blew that away.
Revenue of revenue $1.3 billion versus $1.26 billion. They also reported that Macau net revenue was down 10.
That was it.
I know, 10.3% year over year. That's
what I saw. That was disappointing. And that's why they hit it off the hop. And they hit this thing, how low, Joel?
Oh, pre-market low, 90.60.
That was after hours last night. 90.60. So lots of lows down there too. So if you're using your daily charts and looking at these lows, there's some opportunities here. This market, man, it just dips. The stocks dip 4 or 5%. Not talking everything but biotech because those go down forever. But I mean, all these tech stocks, and the casino, and a lot of these other stocks, they dip 4 or 5%, and the buyers emerge, and they can't even stay down here for an hour. They're down there for a few minutes, and boom. Right back up, and now you're looking at the stock up 7 points. So it's a 12-point rally from that low.
All right, pre-market high 103.50. You did have a triple top at 102, but it's sustaining above that level, so it holds that level 102. I don't see why it can't test the high of the move. Back in November, on November 30th, we hit 104.90. So those are your levels, 102, 104.90. And I just want to mention, you said, biotechs, they keep going down. I got an opposite one here that the Brentster pointed out to me.
You got a biotech going up?
Well, I don't own it. Maybe Brent does.
What is I want to know the biotech stock that's going up.
CARA.
CARA. This is the biotech. Cara Therapeutics, CARA. Whoa, Brentster finding the good ones there. $6 in November, 13.74. Don't call it a double because it's more than a double. Wow, that's nice.
I've been searching for news on this thing, and you would think it would be drug related or something going on. It hasn't. And then we were just looking at the daily charts here since the beginning of the year. I think you've had maybe 2 or 3 red days, but the biggest decline so far this year was when it dipped from 11.89 to 11.60, a 29-cent drop. So I don't know if anybody knows what's going on, but found one biotech here that's
hot.
Yeah, it's bucking the trend.
Nice. Good find there, Brentster. Chat's buzzing, all these other earnings. Starbucks getting the beats here. Starbucks is not bouncing back here this morning. And the one concern here is, some of these food stocks, like look at, and some of these more conservative stocks too, like Whirlpool yesterday, that opened and then they whooshed it even further down. So just like we were saying, before, it's buy the dip. It was buy the dip last night on some of these tech earnings. But you got to decide if the stocks are in favor or not because some of these just don't come back. I don't know if Starbucks fits the bill, if they're going to come buying this one back or not. Maybe, there is a low. If I was looking for a low, 55.04 was the low of the move back for this year, back on January the 3rd. You're about $1 away from there here, but this isn't a tech stock.
It's not a tech stock, and it's not really getting a bounce, distancing itself from that pre-market low of 55.65. So there is a low just under there at 55.38, 55.04, maybe a nice whole number here, but certainly not getting the bounce here like you did in the tech. So the more it stays down here, the more you think there could be a continued move to the downside. I don't know if Amazon is selling coffee yet.
And then VMware also reported last night. Bob Wire talking about that one. They did all kinds of stuff. I thought I even saw a buyback across the tape on this one here too. But VMware popped and it kept up. So it wasn't one that was volatile. It just went straight. It went up and it stayed up the entire after-hours session. Trading up $2 here right now. Spencer, give us the VMW report.
VMW reported Q4 EPS of $1.43 versus $1.40, so it beat by 3 cents. Revenue $2.03 versus $1.99 billion, so it beat there as well. They also issued some guidance. They see fiscal year 18 sales at 7.5 to 7.57 to 7.44. 7.57 was the estimate. Is the guidance. $7.44 billion is the estimate. So they beat on the sales guidance. Let me get that out correctly.
I've traded VMware a lot of times, and I trade off earnings, and I'll tell you, VMware is thin off the hop, and it can be very wild. So, this is one that, if you are trading it on, I'd expect a 4 or 5 point intraday range on this thing. So, you think about the big hole number 90 maybe off the hop, but, it's up 2 points here, 86.40. It's a wild child, though. Like, it can do pretty much anything.
Sean Udall was pounding the table on this one. I can't remember when it was when he just got down in the lower 40s, but now a doubler, 88. That's your pre-market high, backed off to 86.40. So we'll see if that high is protected here. If not, use your half and whole numbers. This stock had a major fall from grace. I see 93.43. That was your high back in August of 2015. But you can find some intermediate levels in between there. But our first target on the upside, 88. That's your pre-market high.
It's
First guest here,
8:15. We're going to
8:15.
go to our first guest. That's Christian Magon. He's the founder and CEO of Magon Capital. He's an ETF veteran. We're going to talk to him about retail because he's got a retail ETF. So we'll be right back with Christian.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Chaikin Analytics. I'm your co-host, Joel Elconin, with Spencer Israel here in the seat. We got Christian Magon on the line, founder and CEO of Magon Capital. Christian, how you doing on this Friday morning?
Come on, Joel.
Yeah, I'm doing well. I mean, I hope it's not Monday because I'm ready for a weekend, but I'm doing well this Friday. Great to join you guys.
All right, a little bit of your background.
Yeah, so I'm part of a ETF sponsor. Many people have seen the rise of ETFs. They've grown quite a bit now. Just in since the financial crisis, there's about 20 times more dollars going into ETFs than mutual funds. And I've helped to launch more than 60 ETFs in the United States. I'm CEO of Amplify ETFs, which is an ETF sponsor, which has a variety of ETFs trading in the United States.
And why should people consider putting ETFs in their portfolio?
Well, for most investors who potentially own mutual funds, I think there's some advantages of ETFs. They tend to be lower cost, they tend to be more tax efficient, and they tend to be more flexible in terms of your ability to buy and sell them throughout the day. So we think that's kind of an interesting play as investors try to be more efficient with their portfolios. Also, for individual stock traders, ETFs offer a way to access market segments very quickly, reduce some of the single stock risk. Also, it's a great way to find some stock ideas by looking at what ETFs are moving and being able to look at their transparent holdings to find out kind of what underlying holdings are causing that movement. So kind of a variety of ways ETFs might be able to be incorporated into people's portfolios.
And moving into the Amplify Online Retail ETF, iBuy is the symbol. What was the reason for getting it started, and when did it start trading?
Yeah, so believe it or not, there's about 19 different ETFs that are in the consumer discretionary space in the United States, but none of them focus on the online retail segment. And as you guys know, online retail is really marching forward. It's really clicks over bricks when it comes to online retailers. We've seen a pretty big performance difference in companies like Macy's and Kohl's, these traditional retailers, versus the Amazons, the Alibabas, the eBays of the world. So we wanted to launch this ETF to provide diversified exposure to that group of online retailers. It's an index-based ETF. It tracks a little more than 40 online retailers. In order to be in the index, you have to have 70% or more of your revenue coming from online retail sales. And an assessment is made by the index provider. It's a global ETF. 75% of the companies are U.S.-based. 25% are outside the U.S. And the ticker is iBuy, I-B-U-Y, pretty on the nose there. And we've just launched it here this past April 20th, and seen some significant outperformance, more than 15% outperformance of iBuy versus, for example, the Spider Retail ETF XRT. So a way to really go after the alpha in consumer discretionary or retail stocks, we think. Certainly retail is a bit of an unloved sector, but we think online retail and iBuy is a little bit of a gem right now.
And there are no brick and mortar online. I mean, Macy's is trying to build up their online presence. I know a couple other companies are trying to do it, but Macy's or Kohl's. I mean, you can look at the charts of these stocks, and man, I mean, are these companies on the road to zero?
Yeah, Joel, I think that for investors in Kohl's and Macy's and kind of the other brick and mortar, they should expect consolidation. They should expect more store closures. I think that this space is really in desperation mode. We've seen technology disrupt other industries, and it's really coming hard right now at the retail industry. So I think we're going to see retail stocks change quite a bit as we know it in the footprint, kind of the real estate, if you will, of traditional brick and mortar companies shrink. I think we're going to actually see some of the online retailers actually start to have a physical footprint. We've seen some initiatives like that through Amazon. So, I think when you're looking at your portfolio, you got to be careful about how much traditional brick and mortar retail you have exposure to. We think iBuy, the online retailers, could be a great complement. There's really the future there. It's a great hedge, but also a great dose of potential growth in that segment. Times are changing, so to speak, and I think online retail is where it's at. Even though it's had so much growth, it's still less than 10% of all U.S. sales is done through the online retail channel. So it's still early in the ball game for that area. We've seen estimates that number could triple in the next 5 to 7 years. So a lot of growth in store for online retailers.
All right, we have a symbol here popping in the chat here. EWW, wait, that's a Mexican ETF here, so I don't know if you have any kind of opinion on that. There's certainly a lot of stuff in the news regarding that, but let's skip over. One thesis I've had that really hasn't played out in quite some time here is the effect of these brick and mortar stores on the retail industry here. And I'm looking at a chart like Taubman Centers. I mean, doesn't it, just drawing a parallel here with these big stores, the closings, I mean, what are they going to fill the spaces? Do you see any implications for the REITs and the real estate, the big mall companies from the change in consumer spending?
Yeah, I think it's really a downdraft for these companies. They're going to have to figure out, what are they going to do with these, a lot of times some of the tenants that are kind of the anchor tenants. We recently saw a mall in Pittsburgh sell for $1 that was previously valued at more than $100 million. There is kind of a sea change going on in all this square footage that traditional retailers take up. I think what's going to happen is we're going to see some of these traditional retailers partner up with each other, and we're going to see brands now kind of couple up in stores. We started to see it a little bit with Nordstrom and some of the other kind of related luxury brands where they're doing stores in stores. But no question, this is going to be some downward pressure on that commercial real estate market. They're going to have to figure out what to do with those spaces. There is some move by Amazon, for example, to get into some physical locations. The interesting thing about companies like Amazon doing that is they don't view the physical location kind of similar to a JCPenney or Kohl's and Macy's. They see it as a multi-use center. So not only to display things and sell things, but also as a distribution center, as a quick ship inventory area, potentially even, Joel, as a drone launching pad to do some delivery in the future. So it's going to be, I think, a change in terms of how these big footprints are used. Hopefully they'll get more ROI on them. And that's part of the power of technology. I mean, if you own traditional retailers right now, it's not unlike owning a lot of newspaper stocks 10, 15 years ago. I think you really need to look towards the future and see, what's out there in terms of, for example, technology and the, disruption that's happened between newspapers and online sites like Benzinga, and try to get access to those. And the way to tilt, I think, now is towards online retail stocks.
Do you follow the Robo ETF at all? ROBO?
Yeah. So artificial technology, machine learning, those are going to be, great growth areas. And I think that's a great way to access that area, the robotics ETF. It's not only just automation, but it's also kind of the computer learning and tasks that is growing very quickly in terms of its usage and its power. So that's another great theme in the ETF space to play. Which robotic stock is going to be the best one to own? Which online retail stock is going to be the best owned? How do you find the next Amazon? I think the ETF space kind of gives you a compelling value proposition there to buy kind of the universe. Whether that's, I buy for online retail stocks, Robo for the artificial intelligence robotics area. Another one I like quite a bit is Hack. That's a great way to access cybersecurity companies. It's been doing quite well since the beginning of the year and kind of broke through its 50-day moving average. It's been on a tear, and certainly cybersecurity isn't going away. I'll tell you something real quick I heard the other day. They said, hey, if you want your kid to have a job when they get out of college, have them major in computer science. If you want them to have a job for life, have a major in cybersecurity. And that's the way it seems to be going in the technology space right now.
All right, moving on here. If you're looking for some contrarian plays on the strong dollar reversing, what ETFs are you looking at?
Yeah, so, we've certainly seen the dollar, take a look at the dollar-yen relationship since Trump was elected. Kind of interesting. Dollar continues to really go stronger versus the yen. One contrarian way to think about this is, how far can the strong dollar go if Trump really wants to see kind of other countries not, so to speak, have weaker currencies. And if that means a weaker dollar, that certainly should be good for gold and gold miners. So, a great way to play gold are the, large gold ETFs, GLD and IAU from State Street and iShares. A little bit more aggressive ways to play the equity side, GDX, the gold miners ETF from Van Eck. You also could go even more aggressive, more volatile GDXJ, the junior or the small cap gold mining ETF. All of those are contrarian right now, so, especially this past week as we've seen, gold take a bit of a hit here. But I do think at some point the dollar is going to reverse itself, and I think there's a really good opportunity to play that through gold. Certainly TLT, the Treasury ETF, could be another way to play it as well.
All right, and talk about a beat-up ETF and sector, Biotech, and you got CNCR here on your screen. Tell us what you look at in this one.
Yeah, so dark cloud over biotech, right? First it was, Bernie Sanders and Hillary Clinton. Now it's Trump's made some comments about pricing with these companies and some of these companies kind of ripping the American public off. It's affected all biotechs. It's certainly a contrarian play to look in that space, but the growth and the potential in that sector is quite amazing historically. One area that we think is even more interesting and may even have some defensive abilities when it comes to price controls is cancer immunotherapy. It's interesting to see Jimmy Carter at the inauguration. Someone who was dealing with brain cancer and beat brain cancer recently. How? Through immunotherapy, essentially using his own immune system to fight the cancer and eradicate it. I believe he's cancer-free. Immunotherapy really is kind of a life-changing technology. It saves quite a bit of money versus kind of traditional cancer treatments, and it's been effective in a lot of different types of cancers. So we think that area is kind of one that might be able to justify its pricing and see a huge migration of current cancer spending into those types of treatments and to the companies that provide them. So there's only one ETF that really focuses on the cancer immunotherapy area, CNCR, the long car cancer immunotherapy ETF. It's an ETF we have involvement in as a firm and believe in. And it's a great way, I think, to not take, again, company-specific risk, which is going to be the best cancer immunotherapy company. Instead, you buy a basket there. And I think it's something worth taking a look at because these type of technology disruptions, whether we talk online retail or artificial intelligence or even cybersecurity, can yield some interesting, I think, capital appreciation for investors. Certainly, these are more volatile plays, but less volatile probably than owning one or two individual stocks in the space. So CNCR is something we think going forward as some of this biotech area and issues work itself out may be something to keep an eye on due to kind of the promise of immunotherapy.
like CNCR, isn't that that's Brad Longcar, right?
Yeah, that's Brad Longcar.
Yep,
You're
yep,
exactly
yep,
right.
He's been on the show a few times. All right. Christian Magon, thank you so much for joining us today. He's the founder and CEO of Magon Capital. Christian, thank you so much. We will talk to you again soon.
Thanks, Joel. Thanks, Spencer. Take care, guys.
All right, chat is buzzing. We're trying to get to as many of these stocks as we can. First, I just want to, I know we covered Starbucks, but I wanted, we didn't go over the numbers, and I want to highlight one thing specifically, that comps were up 3% globally, but up 6% in China for Starbucks. So I wanted to just give that a quick shout out, because I thought that's what stood out to me looking at the report yesterday. Okay, lots of stocks to get to. Let's start with AAL, because they reported this morning. They reported Q4 EPS $1.48 versus 92 cents, revenue of 9.78 versus 9.74 million. So a beat on the top and a beat on the bottom. They also that was the number. So let's get some levels.
Boy, Mr. Buffett just nailed this industry, huh? Buying it back on the lows of the move. I'll just give you the numbers real quick here. You made a spike high and you went up there a couple times at 51.25. So that could be a target on the upside. Also, 50.64, we're trading above that. That was the former high of the move. For those of you that are thinking, well, this is up too high at $1.07, just let me bring up the chart from Love yesterday, and holy Toledo, that thing ended up being up $4. So keep an eye on that pre-market high, any kind of continuation for that. Look out on the short side.
Someone also mentioned CL in the chat, and we also want to look at those numbers real quick. Colgate Q4 EPS 68 cents versus 76 cents. Revenue 3.72 versus 3.87 million, or billion, excuse me. So not good.
Not good. Not showing any signs of life here. Straight down in the pre-market. Holding here, got a little bit at 64.75. Let's see if that's taken out. I'd have to say 64.50 area. I see a triple bottom there from the beginning of December, so keep an eye on that area.
And a stock that's mentioned in the chat did not report earnings, but did hit a 3-month high yesterday. GoPro, Joel, got some nice analyst commentary. Who is the firm? Pat Crest had some good things to say about GoPro. 3-month high. Give us some thoughts on the chart.
GoPro coming back here. You've had a rally, a little bit of consolidation, holding that gap and go. So, there's a situation if you're not worried about going down to fill the gap. What did you hit? Actually, a few days ago is when it hit that 1044 level. And I also noticed some highs back at 1050 that in that same area back in November, December. 48 cents away from there. So need to clear that 1050 for another leg up here in GoPro.
We just got Chevron a couple minutes ago. Q4 EPS 22 cents. That does not compare to the 64 cents from a previous quarter. Revenue 31.5 or 0.49 to be exact $billion versus a $33.76 billion estimate. So they missed big on the revenue.
And right to a good level here. I mean, if you're looking for some action here at 115, we did have a low below 115, 114.57. Just hit that pre-market, hanging at 115. But I don't know. This thing could be in some trouble. 115 has been a very major support level. We've been holding that since the end of November. So 115. That's your swing number in Chevron Corporation.
All right, 8:34 now. We're going to take a quick break, and we're going to grab maybe our most entertaining guest. He started off his professional career as a stand-up comic. He was lured into a boiler room operation by an admiring fan, and now he runs hitthebid.com and Hit the Bid Radio. He is Kenny Glick. If you don't follow him on Twitter at Hit the Bid Radio, you should. So we'll be right back with old Kenny.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Chaikin Analytics. I'm your co-host, Joel Elkanan, with Spencer Israel, and we have Kenny Glick on the line, owner and creator of HitTheBid.com. Kenny, have you stopped celebrating Dow 20K yet?
Even my grandmother called me. She's very proud, finally, after 25 years. She says, "Oh, I guess you still actually do have a real job. I heard you on the internet." Yeah, it's been fun. I actually started printing out Dow 24,343 hats now because I want to be the first one to have that hat on. But yeah, man, it's great having you guys. It's great to be back with you guys because I remember your chat room was laughing pretty hard when I gave the date and the time that it might happen, which I think was about 2 years ago. Off by 3 days, so I should be condemned, I guess.
Wait, oh, I'm sorry, and what was that new number?
24,343.
And when's that coming?
That's around, wait, I have it. I wrote it down yesterday. Hang on a second. I'll give you the exact date and time. I have it set for around March 16th, 2:15. So remember that day, March 16th, 2018, at around 2:20 in the afternoon. I'm thinking.
All right, 2:20 in the. I'm writing that down. 2:20 in the afternoon. Okay, got it. What specific? Any specific sectors that you're particularly active in? It's been a pretty wild year with the election going on. Anything that you're looking at right now?
Well, actually, I've been kind of liquid. I've dedicated myself to just being in the diamonds to celebrate the right way. So that's been a pretty good trade. You know, I've been sitting with the DIA, obviously. I've been writing calls while we were consolidating for a couple of weeks, and now we got the breakout. So I've been, I was listening to the other guy talking about ETFs. I've been focusing on the Qs and the diamonds because it just takes away the clutter of having to worry about earnings reports and, individual stock risk. The Qs and the diamonds have been producing really well. But I don't know if you've seen me on YouTube lately, but I'm growing an anti-UVXY beard right now just to prove a point. And what I've also learned is that Jews cannot all grow beards because I'm on 27 days of growth right now, and I think I've stopped. I was hoping I was able to grow some really, really long beard in defiance of this product, UVXY. You guys know about this one? I probably talk about it with you all the time.
Yeah, I know about it. That's one of the. Is it inverse?
Yeah, triple leveraged VIX product, which is got to be the one most hilarious stocks that actually exist other than dry ships.
Oh, I was going to go there. With the dry ships. And I got a buddy of mine that's been I think there's 7 shares outstanding now. And a buddy of mine's been trading it. And I'm talking to him about it. And, because everyone remembers that run that it had. And, he keeps on buying it and getting stopped out, So finally yesterday, I'm talking to him and I'm like, okay, there's a low at, $3.98. I go, maybe it's going to hold the whole number, $4. I look and the thing is down again. I mean, can you find any reason why they let this stock continue to be listed on an exchange?
Well, it's Wall Street, and I think it's now somebody's personal joke. And I think that run that we just had, 2-3 months ago, where it was a fantastic short squeeze that was probably done by the company insiders themselves, doing back-to-back reverse splits and then releasing some PR news about, a merger that they got involved in, and off it went. And it was a lot of fun while it was happening. We were involved, between 7 and 20, and we thought we were champs of the world. And next thing you know, it's sitting there at 120. But this is just a penny stock that people don't seem to realize. And just like every other penny stock, every once in a while they get pumped and then they get dumped. People just don't want to believe that this is not a legitimate company anymore. And, I'm questioning it also because I think any day, finally, and just like UVXY, these are two products. Almost dry ships is, the worst part about it is they perpetrate themselves as a real company still, where this They haven't been a real company probably since 2006, heavily in debt. Their ships are rotting away in the Asiatic Sea. And if you do any research, you would never want to own this company. It turns out most people are just bag holders, just like, any other penny stock, and they just don't want to give up on it. And then it just, keeps on going down. It's not funny, actually, that people still get ripped off by this stock.
What about the 22 down day in a row rule? I mean, don't you have to buy it after, well, I shouldn't say 22 straight down days. It was unchanged after it did the reverse split at 808. It held that, for one day. But unbelievable. Do you have a 22 or 23 or 24 day down rule that you may implement in this one?
Oh, my God. The funny thing is there was 2 setups for that stock over the last 5 or 6 days. We had a trade from 4 to 450, and I think there was, right before it broke below 5, it held 5 and popped, 20 or 30 cents. We're day traders still. We like trading actively on the day, and we're always watching it, because one day they might, generate a monster short squeeze on it again. But no, you just don't want to own it. You just want to trade it. Treat it like a toy. It's the fun toy that every once in a while you're like, oh yeah, that's still in the corner of the house. Let's play with that for a little while, and then you throw it back in the attic or you're back in your basement, and you bring it out every once in a while for company. It's a joke. It really is the running joke on Wall Street, and it's sad because I was out in Vegas while that was happening, the monster move, and I was at the Day Traders Expo, and I had a couple of guys coming up to me asking me about it, and they said, well, the stock just pulled back all the way to 50. What do you think? I'm like, it'll be $5 within 3 weeks. How's that possible? I'm like, well, maybe you don't know about dry ships, but every 7 or 8 years they have these monster squeezes, and eventually the stock goes back to nothing. I had a debate with a guy. We even started, almost coming to blows, how he thought he was right. And then when it was down at 20 the next morning, he's like, it's never going to break 20. Stocks that go that fast, 20 is a very solid number. This is where I'm loading up. I'm like, well, good luck with that, my friend, because the stock will probably be sub-penny split adjusted within a month or two. And it's unfair. It's incredible that this stuff still goes on.
All right, before we let you go, I just want to go back and the Dow. To me, Dennis and I put a lot of emphasis on the S&P 500. If you look at some of the stocks that are in the Dow in 1999, Allied Signal, Citigroup, General Motors. Looking out at this, Dow 25,000 price weighted. What other transitions do you forecast in the Dow?
Well, right now, I think that obviously we're not talking about the same Dow every 5 years or so. There was Bethlehem Steel back in the day.
Yep.
But as far as this market's concerned, what I look at it is that people are still waiting for a correction. But I think they failed to realize that last year we had a monster correction to start the year, and we rallied off that. And then we had the Trump election, which was kind of a stealth correction. If you're a trader and you were aware of this going on, we were down 1,000 points.
Yep.
The NASDAQ futures were down 280. So there was another correction in November, which I think this market just built off. And if you look back for the last 3 or 4 years, the market just came out of a consolidation. So I don't really, put so much credibility in what 30 stocks are in the Dow. It's more of just a popular, way of gauging what the market's doing. And I just think we're going higher. It really comes down to that, because I don't think anything's changed. And the people that continue to try to find faults in this market, I guess they're looking at alternative facts, which is now my favorite hashtag of all time.
Your favorite hashtag of all time. All right, Spencer, did you get him on the schedule for that day when Dow hits 24,630? Are you busy that day, Kenny? Because we want to have you back on. In fact, we like to have you on anytime because you add a little bit of humor to the markets. We all need that. Kenny Glick, owner and creator of HitTheBid.com. You can follow him on Twitter at HitTheBidRadio. Thanks a lot, Kenny.
Hey, man, good talking to you, and have a good weekend. If this is the weekend, alternative facts and all that.
Okay. All right, S&P futures trading down just one tick here, 2293.75. Starting to build a little resistance up here in the upper 2290, but who knows? 2300 is just 6 points away. Spencer, do we hit some stocks in the chat here? I hope you guys got on this CVX here, because I wasn't joking around when I said it better hold 115. And Kaplooey, I don't know if that was Bob Wire or Brad DE or Ace hitting it, but man, oh man, we just hit 112.40. So not a bad call by me. I wish I could have been quick enough to get it.
Great call. Great call. Okay, I want to get to PayPal, and we'll cover earnings stocks if you have anything you want to get to in the next 13 minutes or so before we get Gordon Johnson on. Just say so and we'll cover it. But PayPal reported yesterday Q4 adjusted EPS 42 cents. That's in line. Revenue $2.98 billion versus $2.98 billion, so in line there as well. They also issued some fiscal year 17 guidance. EPS $1.69 to $1.74. That's in line. Sales 12.4 to 12.6 billion. That's also in line. The big thing, though, is that Bloomberg reported late last night that the CEO said they have been in talks to partner with Amazon on payments.
Well, it's been all over the map here in the pre-market trading. You got a low at $40, currently hanging out at $40.80. I mean, this one had a real nice run going into earnings. So when you have that, kind of got to blow things away. Didn't exactly do that, but not exactly getting killed either. Looking on the daily charts here, we are below the $41 level. That was a low at $41.03. So not really looking for much of a rally until we can clear that. Also keeping an eye on the close from yesterday at 41.50.
I was on mute talking to myself. I was on mute. No one could hear me. What about E-Trade? They reported yesterday as well. I want to pull up their number. I just had it. Give me 1 second. Pull up E-Trade.
Nice run.
Yeah. Why don't you give me a technical look while I pull up my E-Trade number?
Okay.
I'm scrolling through.
You know, I wonder if do they have the commercials on the Super Bowl?
I got it now. Q4 EPS 46 cents versus 42 cents. Revenue of 509 versus 504 million. So beat on the top and a beat on the bottom.
All right, hanging out at $38 here in E-Trade, EFTC. Has had, I always mess this symbol up. I got it right here on my Thinkorswim
ETFC.
platform. I got it. $38. That's the high of the pre-market session. That's taken out the former high of the move. I believe. Oh no, it's not an all-time high. This stock really got up there in 2006, 2007. So above 38 here. Pretty open skies. Late to the chat here is someone asking about Microsoft here. Great report. Let's just take a little. Starting to leak a little bit. Moved up to 65, 68. That blows away a new all-time high. So the fact that it looks like we got a step-down seller in here, maybe the high of the day's in in that one, 65, 68. In order to fill the gap in Microsoft, that is to get back into yesterday's range. You got a ways to go, folks. 64.54. That was a former all-time high from yesterday. That could act as support.
Bob Wire in the chat, Amazon has plants that recycle paint. Not sure what that means. How do you recycle paint? I don't know. Moving on to Honeywell. They reported Q4 EPS $1.74. That's in line with the estimate. And then revenue $9.99 billion versus $10.15. So a slight miss there. They couldn't quite get to that $10 billion number.
Yeah, this one I know had some earnings warnings, and I don't know. They must have had some lower expectations, or that was a different quarter. Lot of consolidation here. This kind of reminds me of the Chevron chart here. Consolidation near highs, several highs in the same area. So if we really go into rally mode, folks, look at the high of the move at 118.75. But what concerning me here is the $117 level. You've had four of your last 5 lows right around 117. So that's a big level there in Honeywell.
Apparently you can make mulch with recycled paint. I did not know that. Today I learned.
You got Bob Wire is like he's throwing you under the bus today.
That's okay. That's okay. GD General Dynamics Q4 EPS $2.62 $2.62. That's a 10-cent beat on the EPS revenue, 8.23 billion versus 8.29, so a slight miss there on the GD revenue.
All right, here's a defense stock that going a little bit of different direction than your Lockheed Martin. 180.09. That is the high of the move. I believe that could be an all-time high here in General Dynamics. Let me take a peek here. Yes, it is trading at 178.50, up $1.20. See a couple resistance levels here if you want to play them. Besides the pre-market high of 178.97, high of the move, all-time high, General Dynamics 180.09.
We're going to have Gordon Johnson on at 9 o'clock, so I want to do a quick technical look at Caterpillar because he came out on Wednesday with a midday note on Wednesday. Caterpillar had earnings on Thursday, so first to go over their report. They reported Q4 adjusted EPS of 83 cents versus 66 cents, and the sales of 9.57 versus 9.84 billion dollars. Gordon came out and said that China is much more important when trying to predict global mining capex, and he said that the 2017 guidance will be the real negative catalyst, and he was pretty much right because that's what they issued some weak guidance, and that's what happened. So we're gonna ask him about that, but give us a quick look at the chart.
It's an interesting chart here. I know we hit $100 in the pre-market, but the high from yesterday, 98.98. Wild session in this one, going off the board at 97.22. 96. I mean, if you want to stay long this thing, that was the low from yesterday right there. 96.02. So I'd keep an eye on that. I mean, things look pretty open in the $95 handle as well. Your 4-day low, and the cat comes in at 94.80.
I was looking at analyst upgrades, downgrades. Nothing super interesting this morning. I did see Bank of America reinstating Humana at a buy. I thought that was funny. We got a downgrade. All these analyst ratings in earnings season don't mean a whole lot to me, so I don't really pay attention. Do you feel the same way?
Yeah, I mean, you just have to see how that whole thing plays out.
Let me go through back to the earnings list.
Sure.
What else did we have this morning? I'm looking through. Oh, we had AbbVie. We should cover AbbVie. ABBV reported Q4 EPS of $1.20 versus $1.19. Revenue $6.796 billion versus $6.92. So a miss on the revs and barely a beat on the EPS. They also issued some guidance. Fiscal year 17 EPS $5.44 to $5.54. That's in line with the estimate, and that was it.
I mean, stocks and sectors that out of favor. I mean, they're just out of favor here. And you can see it trading down not a whole lot in the pre-market. We did have a low in the pre-market section of 60.32. Trading above that level right now. That 60.32 had a low at 60.34, so that's your 2-day low. I think you hold that. Chance to move north, but underneath that, you could easily fall on the $59 handle. 59.67 is your 3-day low.
And we have some guidance this morning out of GoDaddy, GDDY. They see Q4 revenue $586 million versus a $585 million estimate. This is prelim Q4 revs.
GoDaddy, Danica Patrick, right, is a spokesperson for that. GDDY. Let's take a look at that. See what they did with the guidance. Took it up originally on it. When did you make that high? Made a high at 36.65. That was actually in yesterday's session. Hanging out here unchanged. Closed near the low of the session. So, boom, you hold 36 here. Chance to go north. Underneath that, your 2-day low is not down to 35.08.
Kenny Glick popping in the chat right now. Kenny talking about his live audio all day. After the open, of course, we won't be on, but we are extending the show a little late today just to get Gordon Johnson on at 9. Frankie23 asks, is anyone shorting mall REITs? Joel, you have. I know. Yeah, but you want to.
I want to.
I know you want to.
I guess well, now this might have been a little bit a better play. I can't remember the retail. Now this chart doesn't look very good here. SPG, is really, you look on the monthly here. When did we have the original retail fallout? Man, why didn't I have this symbol on here? This one has really come in. This was in July of last year. This thing hit 229.10. Now we're down at 182 here. If you're trading this on a daily basis, important level on the downside to keep an eye on would be 181 even. Two lows this year. 181.10, 181.11. Those represent the lows for the year. After that, no, not for the lows for the year. Under that 182 level, 178.17. That is your January 5th low, and I stand corrected. The low for the year is at 76.87.
Let's do we'll do one more earnings report before we grab Gordon, and let's do Moog. Moog ticker on TOS could be MOG. I'm not really sure. MOGA maybe. They reported Q1 EPS 84 cents versus 80 cents. Revenue $590 million versus $583 million. So a beat there. They also issued some fiscal year 17 revenue guidance at $2.42 billion versus $2.45 billion. So a slight miss. And the EPS is $3.50 versus $3.54. So a slight miss there as well.
Moog. Wasn't there a goalie for Edmonton named Andy Moog? This spelled it the same way? Maybe not.
I don't know.
We need Dennis Ed. He's our hockey guy. I know absolutely nothing about this company here, and I'll just say that it's been a slow leak here since it's 73 hit 73.05. Looking at the lows of the move here, there hasn't been much trade in the pre-market. 62.83. That's the level I'm keeping an eye on that. You had a couple big green bars, so I don't know if you'll find a lot of buyers if that 62.83 is taken out.
I'm looking for anything else that jumps out before we grab Gordon, and I don't see any earnings reports that jump out to me. If there is something you want to hit on, let's do one more. Let's do Swift. Let's do SWFT. They do Q4 EPS 40 cents. That's in line. Revenue of $1.03 billion versus $1.04 billion. As far as Q1 guidance goes, EPS 13 cents to 18 cents. That's in line with the estimate. And then Q2 EPS 25 cents to 30 cents. SWFT.
Trucking company?
Sure.
Okay. I thought I remember seeing those on the road. They hit it. They don't like the report. Down almost $1 here. Not good. If you're long, the same 22.73. That was your after hours low. Double bottom, which represents the low of the move at 22.94, 22.95. Just hanging there. Kind of reminds me a little bit of that Chevron here, taking out former support at a double bottom. 8.59, Spencer. You take another break here. Why don't you tell the folks who's coming on?
Yeah, Gordon Johnson. He is maybe one of our most influential guests we've ever had on the show. This guy has the power to move solar stocks, and Caterpillar I would say has a better understanding of that space than any other analyst on the street. So we're going to talk with Gordon Johnson about Caterpillar, the future of that company, and we'll be right back with Gordon Johnson, the managing director at Axiom Capital Management. Welcome back, traders and investors, to Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin. We're on the line with Gordon Johnson, Managing Director at Axiom Capital Management. Gordon, let's just get right to it. You issued a midday note on Wednesday ahead of Caterpillar earnings. What did you see heading into the report, and then what do you see now?
Yeah, so headed into the report, clearly the stock has been extremely strong on hopes for Trump Trump's infrastructure program here in the United States, and that to spur growth, as well as tax reform, and that to spur growth. But headed into the quarter, what we saw was continued subdued CapEx spending, which is a key driver for Caterpillar's business, as well as higher rates, which clearly is negative for Cat Financial. And we thought that was going to weigh on the results. And as we stated, this is the eighth consecutive quarter that Caterpillar has either cut revenue, EPS, or both. And as we stated, we expect those cuts to continue through 2017. We don't think they're going to be able to achieve the numbers they put out there, and that's what we saw into the quarter, and we think we were right in thinking that way.
And what about, let's stay with Caterpillar for a second. So you said that the 2017 guidance would be the major downside catalyst there, and I want you to, can you speak a little bit more about that and also about China?
Sure. So the 2017 guidance, clearly Q4 numbers, that's in the past. The numbers were bad, but the guidance is what's more important. And we think the reason why the guidance is weak is because you continue to have, number one, a big inventory overhang of equipment that's out there due to the past cycle, as well as what we think is currently weakening trends in China that we think are going to have reverberations through the world. So we think that's why the 2017 guidance was weak, and that's kind of what we saw into the quarter.
Sticking, I want to ask you about AKS, actually. AK Steel, they just reported earnings earlier in the week. What do you see out of AKS right now?
Yes, I mean, what AKS said, I think, was somewhat shocking to the bullish pundits and analysts that cover the stock, because their guidance, essentially, ASP is flat. Look, we think there's a big risk to the U.S. steel market in the form of declining automotive production. A lot of people look at sales, but we don't think that's the right metric to look at. We think you should be looking at production. And clearly, Ford Motor, Chrysler, and GM have all said that they're going to cut production this year. Keep in mind, the last time we had an auto upcycle that ended was in 2007-8, and at that time, all the pundits were saying, demand's going to stabilize, and that never happens. Either it's going up or it goes down. And clearly, we had the global financial crisis in 2009, but there was a big spike down in automotive production, and with inventories at near record levels, delinquencies at near record levels, and production starting to slow. Production has slowed in each of the past 3 years. We think that the risk to the steel sector is not imports, but rather declining domestic demand. And if that's the case, no matter how many tariffs you put on imported steel, you're still going to have a weak steel market. Keep in mind, you have more supply coming from the new steel plant, Big River, as well as Aserio Junction. Both of those things are going to be producing steel this year incrementally in the U.S. So, we've seen these cycles where the steel mills hike prices due to things that aren't demand related. Trump enthusiasm. Before that, tariffs earlier in 2016. Before that, it was the Great Lakes freezing over and the idea they couldn't get iron ore across the Great Lakes. None of these things were fundamental catalysts. They were all sentiment catalysts. And what happens is their customers stock up on inventory. The demand's not there, and then you have a collapse in prices. We think that dynamic is happening right now, and you can see it. Scrap prices are completely collapsing right now in the United States, and yet HRC prices are going up. That does typically not happen. Scrap typically leads HRC, so we see some weakness in the steel sector imminently.
Finally, can you explain to our listeners what exactly you think is going on in GATX? You had some pretty strong comments there last week about that.
Yeah, I mean, GATX results couldn't have been any worse. All of these companies, including Caterpillar, if you think about Caterpillar, they've taken now a combined $3 billion in restructuring charges since 2014, and they're guiding to continued restructuring charges all the way through 2018, essentially. So at what point do these things become, I guess, EPS affected numbers? Look, this is real cash going out the door that they're taking out of their non-GAAP reported numbers. When things pick up and this cash comes back, they're going to report that in their earnings. So with respect to GATX, look, the numbers were horrible. The non-GAAP number was good. We think they used some aggressive accounting. But the reality is we think we're in a multi-year rail down cycle. There's a bunch of rail inventory out there. And GADX is being negatively affected by that. And we think that, a lot of people got ahead of themselves in a lot of these rail stocks on the election of Trump. And as the results trickle out, we think it's going to be quite bad. Keep in mind, in addition to GADX, Trinity, another company we cover, a lot of what they make, a lot of the rail cars they make are in Mexico, made in Mexico. So if Mexico is hit with a 20% border tax, that's going to have a very draconian effect on Trinity's, ability to sell their rail cars here in the United States. And the stock didn't even really react to that announcement yesterday. So we think there's some pain ahead for a lot of these guys.
Ticker there's TRN.
TRN, correct.
Okay, just making sure. All right, Gordon Johnson, love having you on the show. Love your analysis of the steel space. Thank you so much for joining us today, and we will definitely talk to you again soon.
Absolutely.
All right. Joel, what do you think about Gordon? He's amazing.
He's not afraid to make a call. He sticks back. He backs it up with facts here. Once again, Brad D's asking Trump's infrastructure projects increase steel demand, and true. There's something you have to see. All right, Spencer, you want to wrap up the show?
Yep. Want to remind you real quickly once again that today's show is brought to you by Chaikin Analytics with their groundbreaking stock research tools, including the proven Chaikin Power Gauge Rating and Stock Discovery Engine. Chaikin Analytics simplifies complex investment decisions, and it's all presented in an easy-to-understand platform. To learn more, visit chaikinanalytics.com/premarket. That's Chaikin, CHAIKIN, analytics.com/pre-market. Hope you enjoyed today's show with Christian, Kenny Glick, and Gordon Johnson. I'm looking ahead on next week's calendar. Another full slate of guests for you. We've got Tommy Lackey, Nick Shaheen, Gene Munster will be on this show on Wednesday to talk about Apple earnings, so very much looking forward to having Gene on the show. Evan Schneidman on the show from Prattle. He discusses central bank sentiment, what the Fed's going to be doing. Craig Johnson, the technical analyst, and Marie Band will be on the show. So we got a full slate of guests next week, so we're looking forward to having all those people on. If you missed any part of our show today, you can catch the whole thing. It's on YouTube. Right now, the podcast is also on iTunes, SoundCloud, and Stitcher. Just search for PreMarket. Last thing, please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. Hope you all had a good week, and hope you all have a good weekend, and we'll be back with you on Monday. I'll be out of the office, but Joel and Dennis will be with you running through those movers. Have a good weekend, everyone, and we'll talk to you next week.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.